Now, how do we manage losses? Every trader comes into a market and everybody's expected to win. Okay, everybody's expected to win. That's the general mindset. But how can we end up losing money at the end of the day? Well, that's what I'm about to show you in this video. Okay, now there are certain things that needs to be put in place. I didn't know these things when I started up as a trader. There's something that I used to know, that when I place a trade, I'm expecting the market to go in my favor. But what if it doesn't go in your favor? What are you expected to do? There are a few things that I look out for. Now, the first one is this: when I place a trade and the market is not in my favor, there's something that I do. I cut losses short. Let's take for example, I'm having $100 running in a trade, and I open two positions, which is $200, right? So the first trade, I placed double entry, target the first TP and second TP. Now this market is actually reversing and is moving against me. What I do is, to manage my risk, I close one position. Why am I doing so? Now one position, let's say I close it at $50. The other one is now running. Okay, so the other $100 is now running. So what I'm expected to do is watch what the market is doing. If the market finally reversed and moved in my favor, and it moved 30 pips, I've actually made $300, covering up the loss from the $50 trade that I closed. Okay, now that's one. Now the second thing I do is, when I place a trade and the market is, I spot a zone that I say, if the market should get to this point, it means I'm actually wrong. This trade is actually wrong. So I close the position without the market eating my SL. Now I'm tolerating 30 pips stop loss, and I'm cool with it. Okay. Now before I continue, guys, there's something I want to say. I'll be hosting a free training for beginner traders and also advanced traders that are intermediate, that are looking forward to becoming profitable consistently. I'm going to be leaving a link there. It's a free training. Okay, all I'm going to be teaching you in that training is how to have a trading plan. Okay, and it started up tomorrow, so the link will be there for you to click on it and get what across to me, so I can add you up on the group. Okay, so the next thing that I do also, it's, I try my possible best not to open more positions. Now, one of the mistakes that beginners do is, when a trade is reversing and it finally comes to a point, after being scared that the market might hit your SL and discover that it's not hitting your SL, so the market is about to reverse, what they do is they open more position, forgetting that the market has not turned into a profit. They just have this desire, or I wouldn't call it desire, they just have this belief and wish that the market will reverse. Now, oftentimes you are wrong, because the market will stop you out. What you're actually doing there, it's, you are actually, is it called a Matinga strategy also. You are doing something that it will be hurtful to you. Now there's one thing I look forward to protecting in the market, and that's my mind. Okay, my mental capacity. That is one thing that is most important. Now if I told myself that I'm going to be placing $200, I wouldn't want to violate that rule. Okay, if I do something contrary against what I actually believe, it will revolve into me losing confidence in myself in my next trade. So what I do is I stick to my plan. Take for an example, you are doing a business with someone and you plan to do something at a certain time, and the person is what, in mutual agreement with you, and all of a sudden you decide to do something contrary to what the person was expecting. The person wouldn't trust you again. Same thing with us, with ourselves. So what we do is, we should make ourselves, like, become accountable to ourselves. That is one of the what important thing that you need to what hold on to. Now the next thing is how to manage losses. If you know that you're not good in this particular trade, let's say particular currency, I will advise you stay away from it. Now what do I mean by that? If the currency you're trading does not resonate with you, you are not going to be expecting profit from it, because why? You don't actually understand the currency pair, how it moves and all of that. Now I'll give you an example. I was trading gold. Why am I trading gold? I actually love it because it rewards me of my time. That is my reason for trading it. I can wait the whole day. And okay, let me give an example of something that happened 3 weeks ago. I opened the trade on gold. When did I open it? It was at 9 p.m. That was late. It was on a 9 p.m. That was late. Now that market actually moved 10 pips. I'd waited the whole day. Sorry, on was it 10? Yeah, 100 pips. No, gold is actually volatile. I waited the whole day, but I laughed at last, because why? It gave me what I expected. Okay, but if I'm to be trading something like odd USD, it might move just 20 pips and continue the next day. So I just like gold because it rewards me of my time. for waiting. Okay, you wouldn't expect me to trade a currency pair that does not reward me of my time according to my own pattern of trading. Yesterday I placed a trade on gold, and I opened two positions. It was a 1 to 3. In less than 2 minutes, I had that 1 to 3. Less than 2 minutes, I had that 1 to 3. But if it was to be odd USD, that would take me more time. Except there's a news release rather. So stick to this, okay? I'll hope forward to seeing you guys on the group, okay? Thank you.